Let's do another covered call tutorial on how to sell call options on stocks that you own on higher quality companies that you own lots of shares. So everyone's going to have their own little thing. I'm going to show you guys exactly what I do. It's very simple. A lot of people have been asking, like, I can't really get to understand it. So I'm just going to keep doing these so people understand, like, in these market environments, you're going to want to know how you're going to want to have this toolbox or this tool in your toolbox so you can understand how to do this if your position's not looking good. All right, so basically a cover call means that you're lending your shares out, to the buyer that say, hey, I will execute this if it goes to this search amount, search and price, and you choose an expiration. You will need 100 shares to sell one covered call because remember, one contract is 100 shares. So I'm going to show you guys some things that I have done on cover calls, and I'll show you guys what to look for. Like some stocks, you don't have a lot of implied volatility or liquidity to even do cover calls. Like, so you have to look at the option chain and be like, is this a thing that can do it? So because some stocks don't have options, and some stocks have, like, not a lot of liquidity. So I want to do the best thing. Usually higher price stocks will give you that liquidity, but let me go over examples of what I did in the just recently in the past on cover calls, and I have made bank doing this. So I played a stock called S, way back here in December of last year. I believe in this company, and we'll see what it does. But I just didn't get a good average, right? And that's okay. I bought this thing near the EMA 50. You can see right here, we made a big, massive move on this weekly EMA 50, and it was amazing. In the week's return, this thing went up pretty good. Very, it's not like massive returns, but 35%. That's really good for a bigger cap. So, and this thing comes tumbling down, and I took some here, and it just kind of wasn't a good average, right? We went from 23 all the way to 21. So what I did is I looked at the option chain, and when you look at this, you can see first thing I notice is on Webull. I recommend Webull to look at this stuff. Is there options every week? And if there is, then they're highly liquid. So I see they're at 2, 9, 16. There's an option on every expiration. So what I did is I usually do, like, depends on the premium they give. Like, you can see right here, the implied volatility, it's pretty high, right? You're at least 50, and if you go more out of the money, you got 89. So it's got some implied volatility. So if I had this thing right here at $21, or let's just say 22, right? Obviously 2 days expiration, you're not going to get much premium because it's too short, right? So a lot of times is you can go 7 March, and you can see 9 days out, and you can go, okay, well, I could sell this $22 strike here at around 30 cents. Is that the mid? So I would do probably 25 to get filled. And basically what this is doing is you're selling your shares to be executed at $22. If you have near $22, well, basically you will break even on your shares, but you'll always collect the premium, and that's the main thing. So if you have about, I think last time I had, was it 900 shares of this one, so I would have collected $225, and these would give it to me instantly. Okay, so a lot of people will be like, well, what if the price goes way up? Let's say it goes to like $30 by March 25th, which is your expiration. Nothing happens. I mean, nothing bad happens. They just take my shares away. I didn't lose any money. I just didn't make as much. But here's the thing, guys. When you start thinking like that, I'm just going to say you're greedy. It's just like, one, you don't have a crystal ball. You don't know what S is going to do. Because S could do something like this, where it just goes down. And thank goodness I had my cover calls executed because I didn't have a good average. I had to go through 1 week, 2 week, 3 weeks. These are weekly candles. I had to go through this about 2 months of holding this, just doing covered calls. And you can see every 2 weeks, or sometimes I did a 3 week cover call, and you can sell and premium because it's just going sideways and sideways and sideways, and then finally it goes up. Executed my cover call in here, and I never bought back in it because I didn't like it. It just wasn't giving me. It was just a hard stock, right? And that's what I do on harder stocks. So basically, what happens is when you sell a cover call, you're taking that premium off your average. If you have this at $22 and you sold it for 30 cents, now your average is 21.70, because remember, you're always collecting that premium. Um, and make sure you do not sell cover calls if you do not have the shares. If you do not have the shares, every contract is 100 shares. If you do not have the shares, that is the most dangerous and riskiest thing. Cover calls are very safe because you have the shares to cover it. If price goes way up, no worries, right? You have the cover calls, you have the shares to cover it down. So what I'd like to do, in my personal experience, I'd like to get near my average. I'm okay to break even. Let's go through an example I'm in right now. I went with swing trade alerts. I went with, you can look at here, I did some cover calls for Tesla. All right. I said I'm going to buy Tesla here at 297.55. Well, if we go to Tesla right now, 297.55, I'm quite a bit down, right? Yeah, price ended at 290. Now, granted, I did buy some right in here, and I did buy some right down in here. So now my average is around here at the 293s. So what I plan to do with Tesla is I'm like, okay, I know I can't get the exact bottoms. I looked at the chart; it meets the system. We have a weekly EMA 50 right in here for a beautiful bounce opportunity. We have a monthly chart looking like a beautiful uptrend idea. And when I look at these, I have to see, like, is there an uptrend? Is there a solid uptrend? I see on Tesla, solid uptrend. It's hitting that EMA 50. Monthly, solid uptrend. So I see all these factors and I'm like, all this is really good. So I take my shot in here. Last time Tesla did this, it went up massive, right? And I had no doubt it will again. So, but obviously I can't get the exact bottom, right? So I go in here, and when the implied volatility is higher, that means the premium is higher. You do not want to be a buyer when the implied volatility is pretty high. Me personally, anything at 80% and above is too high to be a buyer. Basically what that means is they're expecting the stock to go big one way or another. That's why implied volatility is high. And then when it's high, you could sell more premium. So the premium is really good. Just for 28 February. This is insane, guys. I did 28 February on Tesla. I have, I put my average. I have a pretty decent average here on the. I bought right in here. Remember, I accumulated down. I have around a 290, 293 ish or 294. So what I did is I sold the 295 and I sold it way over $5. I got like 580 or something like that. And so basically what happens is just, let's just say you have one contract or 100 shares and you just sell one, you make $515 here. Right here is your credit. You make that. Right here, max profit you make. And that's if you let it expire worthless, which is what I'm going to do. It's either it expires worthless or I let my strike go in the money because I'm totally fine selling my shares. Every time I sell a covered call, you have to be totally fine. What I usually do is I sell it close to my average, all right? And if it just barely misses my average, that's when I make the most money. So let's say Tesla goes just slightly under the 295 strike by 28 February. That means in 2 days, it's under 295. I make really good money because then I can sell a cover call again. So what I did is my average is right here, right? Somewhere in this area, right in here. I had to look, but I bought it here and here, average same price. What I did is, bought a lot of shares here, bought a lot of shares here, and basically what happens is my average goes under by $5. So 293 turns into 288, and now look where my average is. You see how beautiful this is? It's not about catching the bottom, right? Obviously, we want to get a really good entry with cover calls, and I think what I'm doing with my system is getting a really good entry. I'm using the weekly chart and monthly chart on higher quality stocks. I'm looking at their option chain. Are they liquid? Or is there ones at every week? If there's not ones every week, then I'm not going to do the stock. This is how I play bigger cap stocks and where I don't care if the stock goes down. Because remember, with covered calls, you win in three directions. People would be like, "Oh, your average is so bad. How you look. What are you thinking about it now?" I'm like, I'm sitting here thinking, I'm in here for the long run. I'm making money, passive income every expiration that I choose. So for Tesla, I'm making money in 2 days, no matter what. I collected that premium all again. After that 2 days is up, comes Monday, I click on the 9 days out. I'll do cover calls for 295. This gets me up. Look at this, guys. This puts my average down another $10. Obviously, this premium is not going to be this high coming Monday because as time decay happens, let's say it's like $8. Oh, well, I take it down about $5 to $8, right? And so basically, if price just stays in this area, so premium goes up as the the stock goes up, right? Because if it goes closer to your strike, the premium will go up. So if price just stays in this area, I can keep doing this, and I'll sell it down here, and then my average goes down here, and then my average will go down here. All right. So you see how like it just constantly goes down and down. I don't care. So I don't care if the stock goes down or up, all right, because I win in three directions, and that's the purpose of cover calls. So I'm in. Lastly, I'll do one more that I'm in. I'm in TTD. I took this trade on a monthly chart, right? I'm looking at higher time frames because I want in the longer term picture, I want this to go up, and I want to look for massive areas of support resistance. So I took this right in here. I see that there's big support right here, big support. I see that the monthly EMA 50 is here on the monthly chart. And so I'm like, you know what? It's okay to have a little room for error. Because last time when I played this, or, last time you see it pump just barely on the EMA 50, it can get very close to the EMA 50 and pump. It can go a little under the EMA 50 and pump. I love the EMA 50. I use that as my basis of saying, hey, where can I find great areas to buy high quality stocks and do cover calls. On this one, I sold cover calls 2 times already. I have cover calls expiring on Friday at $77, and I sold this one for 60 cents. And now you can see that the premium is almost decimated. You want this to go to zero. As the expiration gets closer, they were like, maybe this isn't going to get to $77, and these will expire. And so what I'll do is, after that is up, I'll go to 7 March, and you can see how they're weekly chains. They have lots of implied volatility, so it's very good. And I could go to 7 March and be like, you know what? I want to sell another $77. The reason why I'm doing 77, now remember, the strike is up to you. If your average is 75, well, you could do a 76 then. All right. You want to get it where it's near your average. My average is 77. I bought this at $77, but I sold 2 cover calls worth $1 premium. So technically my average is 76. So I could do 76. But I want to make a little if it goes up. So I'll do 77, right? And you can see for next week, I could sell this for 80 cents. And basically what happens is I have 300 shares of this. So I hit quantity of 3. And what happens is I collect $243 off the bat. That's mine forever. And basically, this 81 cents reduces my average from 77 now to low 76s, okay? It decreases it by 80 cents. Well, since I've done this 2 times already and I sold $1 worth of premium, now what happens is this is beautiful, right? I bought it at 77. I did cover calls 2 times already, so now my new average is 76. And now if I do this again on Monday, my new average comes from 76 to 75.20 now. You see how it just drastically reduces as price goes down. It's okay. But obviously you don't want price to keep going down, all right? Because then you're not going to get as much premium for the strikes that you want, all right? So that's the downside. It's not a guarantee that you'll never lose, but the secret is to do it on higher quality stocks where you're okay if it goes down, because in the long term you're willing to hold this, and that's the thesis of cover calls. Okay, I really hope this video helps. I'm trying to make it shorter. Sorry for the background noise, baby crying. I hope you guys got to get something out of this, but this is how I personally do it. All right, there's a lot of videos of people that will tell you how they do it. A lot of people talk about rolling options. I don't personally agree with that. I don't want to roll my contracts. If I'm doing a cover call, I'm totally fine with selling my shares at that strike that I set it at. If price goes above my strike by expiration, I am forced to sell my shares. I'm totally fine with that. And for this example, if let's say TTD goes up to $80 and I'm selling it at 77 and it does that in 2 days, I am totally fine with selling it at 77 and missing out on that $3 gain. Because remember, we can't control what's going to happen. Price can go sideways and go down and up. I win in all 3 directions. That's what I want to teach people is the 3 direction strategies are the best. And this is one of my most favorite strategies is cover calls. Because it doesn't matter what it really does. You're trying to choose crucial areas, of course. You don't want the stock to, just keep plummeting down. So we're trying to choose, really big areas of. You can look at big support, right? You can see big supports all in these areas, and then, but obviously my most favorite one that limits all the noise is I look at the EMA 50. It's one of my favorite EMAs. It's the one that works a lot. And I look at higher time frames, weekly and monthly, to kind of determine what the trend is. And if the monthly is at below this EMA 50, in a general direction, it is an uptrend. Now, it's not saying that this has to pump from here, but when I do the research, I truly believe in the company, so I don't mind it. Okay. All right, so I hope this this video found informative. It's getting to a little later, long size, so I want to cut it. I'm going to make these videos all the time so you can understand this stuff, okay? So covered calls, remember, you had to have 100 shares to sell one covered call. All you do is go into the option chain. Let me show you that one last time. I don't want anyone to get confused. It seems weird if you've never done one. All you do is click on the bid, right? If you click on the ask, it'll be labeled green, and it will say buy side. You never want this to say buy. You never want this to say debit. It has to say sell side, and it has to say credit. If you are in a debit, you're a buyer. If you're in a credit, you're a seller. You want to sell covered calls. So don't buy calls. All right? But it's easy to be just, I mean, it seems weird at you first doing it, but remember, be a buyer. And then also, people ask me, what happens when the premium keeps going up? That is unrealized losses, okay? Nothing happens, right? The premium, you could sell a covered call for 60 cents, right? And the premium can go to $10. You're not actually losing that, all right? Those are unrealized losses. It's going to show you as a big loss. But remember, you had the shares to cover it down, okay? That's the main thing. If you don't have the shares, then yeah, that can be an unlimited loss. But since you have the shares, basically what happened is the broker is going to just take your shares, execute it at the strike you wanted it, and then get rid of the covered call, all right? And then you always keep that premium that you made from the covered call, okay? That's always yours. So I hope that guys helps. If you guys want to join the premium Discord, let me show you guys that here. I do these on higher quality stocks. I show you guys exactly what I'm doing. I did some in today. If you want to join, it's going to be very affordable. I'm not going to rip you guys off and charge you, a lot of money just to join something. Trading is hard. I totally get that. But I'm going to show you guys a system that works. It's worked for me. And this is a safe strategy. This is not some penny stock that can just crash and down and then you can't do cover calls. This is going to be a strategy that can give you long-term growth where a lot of people they just don't understand about it, and they don't understand the process and everything. And I think you guys can learn a lot from it. So click the link down below in YouTube comments below, and in the description it'll say join the premium Discord for my alerts. It'll take you to this free chat landing page. If you want to become a member, all you have to do is hit day trade alerts right here, and it'll ask you to subscribe. All right. The reason why I want you to click Day Trade Alerts is because you can get access to my gold membership for an all-time low cost of $12 a month. It's very affordable, and I want you to learn how to do my day trading strategy while I'm doing this to make income every day. I'm all about passive income. All right, so I sell credit spreads in my day trading strategy, and I make really good money. It's more advanced than cover calls, but I have all the videos that you need to watch to understand this. So if you hit Day Trade Alerts, you'll get access to my highest tier. I'm doing a promotional video that you can get access to this. It's not no trial or anything. You can get permanent discount for $12 a month. It'll never go up unless you leave. Then I can't say the same. It might go up in value. But $12 a month. Subscribe on your computer to avoid the iOS fee, and that'll lock in that. Get rid of the iOS fee, and then it'll be $12 a month. If you have an Android, you will have to use a computer. All right. It doesn't mean you can't use your Android after that, but please read how to subscribe. I'll tell you everything about it. If you don't have a computer, you can use your phone's browser and click this link down here. But if you're not from the US too, it might charge you like 15 or 16 a month. But don't worry, you're still getting a massive discount. That's just because of the currency exchange rate they had to charge through Discord. All right, guys, you guys are gonna love it. What you're gonna get is day trading education, how to learn my day trading strategy, and swing trading education, how to set up the indicators, how to follow the trend, how to sell covered calls. And this video is specifically for this strategy. I'll probably update this one in the new swing trading education because I really liked, showing real examples of stocks that I'm in and how to, correlate to this. But give this video a like, subscribe, comment, share this to your friends that are struggling in the market. That say, hey, if you have 100 shares, use that as digital real estate. It's real estate. That's like having real estate and not having anybody in your place to make monthly income. That's literally what covered calls is. If you have shares that people want, like TTD, Tesla, Nvidia, any company that has option chains, weekly option chains, you need to sell covered calls. And because there's people that you can make monthly, weekly income, monthly income, no matter, it just depends on the strike you choose. If you want to make income every 9 days, you can do that. Obviously, there's going to be less premium the lesser expiration. You know, if you go higher expiration, more premium. If you go closer to in the money, more premium. So you want to do it based on what your average is and make that consistent income. Okay, guys, and then that lowers your average down. All right, guys, give this video a like, subscribe, comment, and I'll see you in the next one.